Hey guys, it's Bitcoin Schmitcoin here with another update for Bitcoin Magazine's video analysis. We'll be taking a look at the monthly time frame, the weekly, the daily, and glancing at the 4-hour time frame today. The one thing I want to point out on the monthly time frame is this swing high here, outlined at the $10,300 price level. It's been a point of interest several times throughout our range on the lower time frames, and when we look at the weekly time frame, we get a little bit more resolution on this $10,300 level. The $10,300 level outlined here, we can see, has been kind of like an inflection point in the market, and it's been the real battleground for the bearish and bullish bias for our range. When we look at the daily time frame, we get a little bit more resolution into the range, and we can see that our prior daily candle actually closed above this $10,300 level, and we're currently seeing some intraday retesting of this level. Obviously, we still have a few more hours left on the daily candle itself. So what we really want to see on the daily time frame is a close back above this level. That's not to say that a close below is like the most bearish thing in the world, but if you're leaning bullish, we want to see a close above this $10,300 level. If we see a close there, we're most likely going to cruise back up and test this 10.6K, maybe even 10.75K. When we look at the 4-hour time frame, it's just as we mature throughout our trading range, we can see that volume is just dying down. Volatility relative to the beginning of the range is dying down. Everything's consolidating. The big players, both bulls and bears, they're not really playing this. This seems to be mostly just intraday day trading going on here. That's people are speculating, they're getting in their positions, and although we're not seeing big swings on big volume, we are starting to see a lot of stacking up of speculative positions that have their stops. So we can see that the price is really confined within this band of prices here, this green chunk of prices down here and this green chunk of prices up atop, and a firm move either up or down is most likely going to be pretty violent. There are a lot of stops that have been piling up for the last month, and once we break the upper or lower boundary, everyone who's been playing long or short is going to be stopped out. So I'm expecting a pretty violent move either to the upside or the downside. Obviously, that's not terribly insightful to say it's going to go up or down, right? So let's take a look at this inverted head and shoulders. Some people call it head and shoulders bottom. It's just a reversal pattern at the bottom of a downtrend. So here's our downtrend going down, right? And we see this pattern forming. It's called a head and shoulders bottom, where we see a left shoulder, a head, and a right shoulder here. And of course, we've got our neckline here with this horizontal that I have here. So what we want to see if we're playing this head and shoulders bottom, this is just a setup right now, but if we break out above this neckline, we've got a pretty stiff price target. All we do to figure out the price target is we take the head, measure it to the neckline, and we get a $1,600 move. And then we project that to our potential breakout, which would have us coming up and retesting this high. So it's about a 12.5, 12.6K price target, which would have us retesting this high here if we manage to break out. The pattern is confirmed if we get a breakout above the neckline. And since it's such a massive pattern, I would really want to see a daily close above the neckline. I wouldn't really put much stock into a 60-minute or possibly even a 4-hour close above the neckline. So I really want to see a daily close above here, and that'll give us some nice confidence that we're going to push to new highs. That being said, if we get rejected here, say, for example, we get a weekly close below this monthly swing high at the aforementioned 10.3K, this guy, that most likely means that we're probably going to come back down here and retest lower lows because the bulls just don't have the buying power to push the price up any further. So this 10.3K is the level to watch on the macro time frame, because if the weekly candle can't close back above it, most likely means we're going to be revisiting this this band of prices down here, and from there we'll have to play it by ear, obviously. But As long as we can maintain our current price structure and we don't see a strong amount of selling push the price down, and we get nice buy up like we're seeing here. We see this nice long wick on the 4-hour time frame. It even took out this low here and it got bought up. As long as we're seeing this kind of stuff, I wouldn't pay too much attention to the intraday chop because it is exactly like I said, it's just chop. It looks, relatively simple on the weekly and the daily time frame, but when we look on the 4-hour time frame, it's just like it looks like a little toddler took a crayon and just started scribbling all over the chart, right? So try not to pay too much attention to this stuff that's going on here. We've got some very clear, obvious milestones that we want to see be accomplished, whether you're bull or bear. And for now, our current milestones, we want to see a daily close above the 10.3 and ultimately a weekly close above the 10.3. And if we can do that, most likely going to see a retest of these prices up here. But like I said, if we can't close the weekly above, most likely going to be coming back down here into this region to retest the bullish pressure.